The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 25th terrific Thursday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free, pick up that phone, dial on in 877-927-6648, internationally 727-445-1044. Would love to hear from you, see what you're looking at. Maybe we can get my set of eyes on your chart, and I'll do everything I can to assist you. So let's go ahead and get this show kicked off here on this terrific Thursday. Of course, this is the Hotel California, sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading up 68 points. She's trading at 16,553. S&P is up 5 points at 1935. NASDAQ Composite slightly red, down 2 points at 45.40. Russell is just slightly green, up about $1. You've got gold up $2, silver down 11 cents, light sweet crude back 44 pennies, trading at 31.71. We've got natural gas down 4 pennies right now. Leading the charge here to the upside, it is Lending Tree. They're up $14, 20%. Whoosh. That's a move. Domino's Pizza up 11%. I think we had Papa John's that was trading to the upside yesterday or the day before. Pizza is the thing to be in. You've got Carter Inc. That's up 11%, up $9. Equinix up 3%, $9. Marriott Vacation up 13%, up $7. To the downside, NetEase down 15%. That's off $24. Chipotle down $15, about 3%. Restoration Hardware, down 28%. That's off $14. Down with 12 million shares. I'll assume that that's pretty good volume to the downside inside of that equity. Zebra Technologies down 15%. That's off $10. But where do we want to begin today? Well, I don't know. I don't know. When I sit down to the chair, I'm not really sure where it is that we want to begin. That's why I encourage you to call in, send me emails, ping me in the den, give me a little guidance here. All right. Well, there's the guidance. Let's go take a look at what's going on the probably the chart to pay attention to. 30-minute chart here for the NQ right now. Now, yesterday, I had a switch that was turned off on my system. Did not realize it till this morning. And yesterday, as the market was moving lower inside the NQ, can't believe that I missed this, but I did miss it. That's the deal. The market was moving lower inside the NQ, 10 o'clock in the morning, moving lower with what? Less relative weakness out there. Yesterday we talked about that nice key reversal session that came in at 11 o'clock. Market went ahead, zoom to the upside, and it zoomed to the upside until about 10:30 last night. 12 and 8, 12 and 8, 8:30 last night, when it ran into the same type of pattern that it has in the past, up at the high as it did at the low, as it has done at the high that came in last evening. Now what we've seen since then is just really a market trade kind of lower to sideways out here. But it does say that this high, we'll use this high out here from 7:30? Yeah, 7:30 in the evening. That high at 4229.25. You can see I just had to do the mathematics on my digits out here, my fingers. But now what we also see out here as I take a look at this 30-minute chart, and to me, as I look at this, it's really neutral because we did have a new market profile that appeared. And this is the one that appeared here, formed at 11:30 this morning. And when it did form out here, we saw the resistance level move a bit higher. We saw the support level move a bit lower out here. The way that this pattern is set up says that price inside the NQ ought to be able to at least test 42.18. If it takes that out, that is, we'll call it at least short-term bullish. When I say short-term bullish on the 30-minute chart. And likewise, if in fact the bottom gets taken out, 41.75, and there should be really strong support down there, well, then the bulls will have failed to hold a level of support. We ought to see the NQ pull back even further. But at this stage of the game, looks to me, as we speak, at just past 1 o'clock, 1:11 in the afternoon, that the NQ wants to go ahead and trade between 41.84 and 42.18 out there. And this is really where the best message, in my opinion, where we're getting our best message, at least intraday, with regard to what's going on inside of the markets. Well, I don't know. Maybe we can go look at the NQ, at the Dow futures out here, because it's got a pretty decent message as well. Now, its message, it did not have the same type of bottom-forming pattern that we looked at in the NQ, but it does have the same kind of topping or short-term topping pattern. Now, if we look at the Dow 30-minute chart, well, that's what we have up on our screen. We don't have a choice but to look at it unless I just simply, ixnay the screen out here, and I'm not going to do that. We're looking at it. But it carries with it a slightly different message than the NASDAQ. In this case here, there was also a new profile that formed. This one began at 8 o'clock this morning. And when this profile began, you can see that the level of support slightly higher than the prior level. The level of resistance, slightly higher. It's bullish mode out here. And we can see right now, by the way, the top of that level is right where we're trading in the 16,520 type level. So any moves, we'll call it any moves above the high, that high being here at 10 o'clock in the morning, 16,534, that would be bullish. That says the Dow at least pulls the NQ up to its level of resistance out here. But this on a short-term basis does not look bearish to me, other than it does have that one little topping-ish pattern. But from that topping-ish pattern, price pulled back to a level of support. It has not busted through it. Doesn't look like it's going to bust through. It looks like it's going to bust through it to the upside out here. If we go look at the S&P futures, we use that same time frame. We use the 30-minute time frame out here. We'll also see that coming into the time frame here of about 7:30 this morning, we saw price moving higher, doing it with less relative strength out there. Let's get rid of the A to B equals C, because there could be an A to B equals CD to the upside. I'm not going to go ahead and paint that in here because it'll freak most people out. But it is there. It is potentially there. We're going to take things one step at a time. What we can see here with regard to the market profile, so we know we had a topping-ish type pattern, right? You had a nice little shooting star, evening star pattern that formed out here that confirmed at 8 o'clock this morning, really confirmed the following session. We can see we've got resistance up here, little shooting star that formed at 9:30 as well. So we know we've got resistance up at the top, but take a look at that support line. Here is its daily profile, which just extended the bottom. Big support out here at 1921.50, and right now price is trading above its its new market profile resistance level. That resistance level as we speak right now, really kind of support. That's 1927 out here. You got to take out the highs. It doesn't have to do it, during the rest of the trading session today. Can do it overnight. Can do it when it wants. But if it does take out the highs, that'd be 1936.75. You got to call it what it is, and that is at least short-term bullish. Steve Rhodes with TFNN. Dow's up 74, S&P's up 5. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 83. S&P is up 6. I just wrote the word segue as S-E-G. W-A-Y. Boy, is that as bad of a misspelling as you can get. You'd be out of that Bumblebee contest right click. Now, we talk about 30-minute charts out there. We got the short term. Let me give you what I believe is the larger term picture of the markets. And they were talking about some stuff inside the Tiger's Den, and I asked why, and they said, well, because it's an election year. That's the segue, I think, into what it is that we should talk about. See, I asked you, I sit down, I don't know what it is that we're going to talk about. I like it that way. That means we can just simply take a fresh look at the charts. We're not biased or anything along those lines out here. And we just simply call it like it is with the information that we've got. So speaking of election years, let's just update ourselves on where we're at and why, what it is that we can anticipate. You know, if you like those cowboy Western movies, let's just call it the good, the bad, and the ugly. And then we'll add to it the good again. So the good, bad, the ugly, and then the good, because I think that's what we need to talk about. So let's start by taking a look at the Dow. Let's just focus completely on the Dow. Doesn't matter whether it's just 30 stocks out here. Let's just focus on it anyways. What is it that we know about the Dow as we speak right now? I know the chart here is a bit cluttered, but it's a really good cluttered chart. So when we take a look at this, here's what you and I know. Look, we look at this all the time. Well, you at least look at this all the time now with me, and that is we look for price to move higher or lower, do it less relative strength, less relative weakness. We wait for the bulls and the bears, which they cannot hide. They have one role, and that is to paint signs for us on a chart. They're really good at it. They are extraordinarily good. So we wait for the cavalry to arrive, and depending on which cavalry it is, could be the bears, could be the bulls. It's like a football game. It's a baseball game out there. They give us the best signals. They, you know, if you've ever been up to bat and you've wondered what is it that the pitcher's going to throw, well, we get to read those signals. Okay, enough is enough. No, take a look at the high that was formed out here. Let me get my crosshair. Here's the high that was formed back in 2007. And when that high was formed, it was done in the key of Stevie Wonder, a little different than me, but that would be singing in the key of G. I don't even know. He should have a song out there. Maybe I've got to sing that song, but I don't know, my voice is going to do us justice. But so you had that move. You also had price moving higher with what? Less relative strength out there. We get the bullish or the bearish reversal signal. Market goes ahead, breaks its trend line, doesn't really break the trend line until June of 2008, and then swoosh, makes a 100% move of a move, gets all the way back to the lows back in 2002 out there. Okay, so where are we now inside the market? We need to do patterns repeat themselves, for goodness sakes, over and over and over and over again. That's how you and I become pattern recognition masters, experts, whatever you want to call it. If patterns didn't repeat again, I'd have no show to give you. I'd be just pulling things out of my out of the air. Yeah, exactly. Now, if we take a look at the trend line inside of the Dow here, that's coming off of the 2009 low. We're using that, in essence, as our touch point. We're using October of 2011 as our touch point. What you and I know is price has broken back down through that trend line. Same thing it did in 2000, same thing it did in 2007. That led to lower prices in the market. We also know price was making higher highs, never took them out, doing it with less relative strength out there. It's got several bearish reversal signals, and it was just really waiting for that baseball seventh inning stretch, which took place back here in May of 2015. Since then, price moved back. Did what it was supposed to do, got back to the trend line, broke it, said sayonara, has given us a signal that price probably at least pulls back into the highs out here of October 7th. That's the price point inside the Dow of 14,198. Maybe it's more than that. Hey, if the market were to end right now, which it doesn't, it ends on Monday for the month of February, leap year out here. Happy birthday, David White, our polar bear out here. He's only 14 years old. I wish I was born. Maybe I wish I was born on April 29th out there, because I don't know. Maybe he gets to celebrate it twice. Maybe he gets to celebrate it on February 28th and March 1st. Maybe it's really a good thing. Maybe he's really like 110, 112. He looks pretty good for 112. In any event, back to the ranch out here. What we know is if the market were to end right now, you'd have a hammer candle. Now, the beauty of that, you're still below the trend line. You get to close below that level. You're long, you're wrong. You know the expression out here. But the bottom line is we've broken the trend. Very good chance of what the Dow is going to continue to do is move lower. Now, whether it holds the highs of 2007, I don't know. That just simply becomes the first target. So that's what the monthly chart tells us. Now, boy, how do I segue from that into the election year? I'm just trying to connect the dots here without you totally saying, what is he drinking out there? Which was really a mean green drink this morning. Nice green juice out here. Well, here's what it is that I am. Let me get to this little slideshow. This way I can update the charts out here. Okay, so by the way, there's my newsletter service, Mastering Probability. If you haven't test drove it, you really should out here. You're missing out on a great newsletter, great trades out here, great information. Certainly will assist you in becoming a better trader. Now, if we take a look at, we are in a presidential election year. That's how we segue into why were they talking about negative things inside the Tigers Den? And the response was, hey, because it's an election year. Well, let's take a look at election years and see what it is that you and I can learn. This is the last 21 election years. So it covers 84 years. So this goes back to 1932. And if we take a look at what the typical pattern is in an election year, this is what it is. It says that the market basically goes ahead and makes a low into about the first week in March. That becomes what? Next week out here. Now, the market's moving higher. It's not moving lower out here. It does show a fairly significant drop, but it doesn't show that significant drop in essence really right out of the gate. But look, what this does say, this could be a cycle that's out there. It says the market moves lower in essence or forms some type of bottom next week. Now, it could be off. Could have been yesterday. It could have been. I don't know. It's a higher low out there, but certainly could have been. This says, guess what? In a normal election year cycle, what happens is the market moves up into May, into that sell in May cycle. In this case here, it really does take a foothold, moves all the way down into the August time frame. Then people must feel okay at that stage, moves up, and then this is election year cycle, folks. It's just that then it just goes to the woodshed. I mean, it takes you out back. This is before the election comes in, but something spooks the market in the middle part of September, and it moves down into the November cycle out there, and then it looks like it proceeds to, it makes a bottom and eventually moves a bit higher. That's what the normal election year looks like over the course of the last 84 years out there. Now, if we take those 84 years, we break down those 21 election cycles into years where the market moves higher versus years where the market moves lower. Really two different patterns out here. Now, they both have one pattern, which is that the market tends to form a bottom either way right here sometime next week. That's certainly the pattern that is out there. They both make highs, but the high that gets formed in May, it never looks back. And this is now, notice that in these 21 election year cycles, I've broken them down between the 7 years, or the 7 cycles, I should say, where the market just moved down right out of the gates versus the 14 years where they move up out of the gates. Huge difference. Which one do we look to be in? Yeah, this year we moved down out of the gates, out of December 29th, December 30th. Never really looked back. We've had counter trend rallies here. But this says that the market, in either case, makes a bottom sometime in March. But the good, that would be the good potentially. The bad is that if the market does make a bottom, does move up into May, once we see that sell-off, if this is the pattern that continues, it gets really bad. I haven't even gotten to the ugly part just yet. But when we come back from the break, this is worse than the roaches that they were talking about inside the den. We've just gone from good to bad. Wait till you see the ugly. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 97, S&P is up 8. We're looking at that extraordinary movie filmed back or released, I think, back in 67, 68, 69, somewhere right around there. The good, the bad, and the ugly. We've looked at the good. Now, did we look at the good? I don't know if I guess we looked at, the good news was we looked at patterns out there that repeat and repeat. We looked at the bad. We were looking at the bad, actually, when we went into that break out there. The bad looked like this. This was taking a look at the 21 election year cycles that we have, breaking those 21 cycles into years where the market moves higher and moves lower out there. Otherwise, we would just be average. You do something average in life, and what do you expect? You're wrong. You don't get average results. You basically get lousy results out there. So you and I, we do not want to do anything average. We want to be extraordinary out here. That's why we like to have an extraordinary day. That's why we like to know that life happens for us, not to us. Now, if we take those 21 election year cycles, we can even break those down to the 22nd Amendment. When was that? When was the 22nd Amendment? Somebody out there probably has the year for me. I don't remember the year. But that was basically the amendment that went ahead and said, hey, we only are going to allow you to run 2 terms out here. But we can take a look at just traditional election cycles and compare those to second term, fourth year, which, a lot of people speak about. And that's what we've got on our screen out here. And you can see that roughly the market follows the same kind of pattern out here, right? So we've got that already covered. We haven't gotten the good, the bad, the ugly type of a thing. But if we also take a look at second term, fourth year, that's what we're in right now, up versus down years, we can see here that the second term, fourth year, down years, those are the blue out here. Again, this is so it doesn't matter whether it's election year, whether it's a second term, fourth year, you break it down into years that move higher, years that move lower. It's just bad. It's bad. It's downright pretty much near ugly. But it's not. We have not gotten to the ugly part. So let's just say that we're in the second year, fourth term, down year. We know that we're in that. We know the market has moved down. And if we take a look at where we're at in that cycle, that happens to be the brown line. That is 2016 versus the full played out for the full year out here. That's where it really looks ugly. Now, there's a little bit of divergence here. Markets move higher. It's gotten off track. Now, I don't know if it's gotten off track, so to speak, in that it's really getting ready to make its next big thump, its next big pullback. Its next big pullback maybe into the end of next week out here. You've got You've got March 1st is on Tuesday. This is right around March 4th, March 5th. So maybe the markets, start to move, at some point in time, start to move down here in through that time period. I don't know. I just know these patterns that are out here. We've seen it come off kilter just a tad out here. But this is what it looks like. And so far, it's followed along pretty darn well. Now, here's the deal. Okay, because this looks bad. You might look at this chart and you might say, hey, whoosh, at least once we get past the election, once we get past the early part of December out here, at least the market makes a bottom and it moves higher. And I would say, well, let's really go take a look at the ugly, because that would be a pretty good conclusion if we looked at this. So what Stevie did for you is I said, we don't want to be average. We would just be taking this and just getting average results. If you get average, if you do something average, you get lousy results. So what did we do? We said, hey, what happens in the following year? Did we really make a good bottom here? And does the market just simply take off from there? Well, the year after an election, okay, this is after all 84 years, all 21 election cycles that I've been through, that I'm charting here for you. And we can see that right out of the gate, the market really kind of consolidates a bit and doesn't make a low until the end of March, early part of April. But then after that, hey, things look hunky-dory. This, however, is only taking a look at what happens after every election cycle. Here's where it gets ugly, because this looks pretty ugly, doesn't it? But the market that moves down, if in fact the market follows this cycle out here, this looks like, okay, we can survive. But look what really happens in the year following a fourth-term president. And there hasn't been that many of them, because it was 1947. Thank you, Duffy. So it was 1947. So we can only look at instances of two-term presidents since 1947. What is that, like 5 or 6? You got Reagan, you've got George W., you got Bill Clinton, you got Barack Obama, but I can't use that data here. Who else? You got Roosevelt, right? I can't totally think on the fly, but you've got like 5 or 6 or 7 different fourth-term presidents since 1947, right? When they said, hey, 2 terms, that's it. But here's the deal: if that in fact is the model that the market is following, this is where it gets ugly. Because not only does it not make a bottom come this year, which is what I had suggested to you way back when, probably at the end of last year, said, here's what we have in store for us, especially as the market broke that trend. Now I have to revise that and tell you the following. The market probably does not find its bottom until the end of March, the early part of April in 2017. And I say that is the ugly. Now, where does the good come? Well, the good comes, keep some powder dry, because it looks like you just want to have this. Look at the nice A to B equals CD that forms in 2017 after that bottom. That's going to be a big bottom, the beginning of the next bull market perhaps out there. But this is going from what was they were talking about inside the Tiger's Den as ugly things. I get cockroaches. I mean, we're down here in Florida. They grow large enough so some of us actually have them as pets out there. But that was the good, the bad, and the ugly. Sponsored to us by who wrote that picture out there? It's a famous guy, I think. Who wrote it? I don't. Who wrote that picture? Who made that picture? I know we got Clint that's in there, but in any event, let's go back and take a look at the market. So you got the Dow's up 109. You've got the ES Mini, or the S&P's up about 10 points. Composite is up about 10 points out here. If we take a look at the VIX index, what's this communicating to us? Say below the 50-day exponential moving average, that says Hugo Montenegro. Thank you, Duffy. It's just great to have this support inside the Tiger's Den. If we take a look at the 50-day exponential moving average, 2180 is the print. You're trading at 2010 out here. Nothing, in fact, to be bearish. About the market yesterday. Again, was nothing more than a test of the 50 line. It become a resistance. Very likely, where is the VIX index going to trade down to? You'd have to say 1865 becomes its target again. So that looks pretty good. Advanced decline oscillator out here. Nothing wrong with that. So that looks pretty good. What's the deal? Why is the market moving higher? Why is it not moving lower? We looked at this yesterday. We looked at this the day before. And much to my chagrin, where I've given you the data, and it's accurate data with regard to the lack of a correlation between light sweet crude and the U.S. stock market. That correlation is here right now. It's here. It's alive. It's well. This is a 30-minute chart. I was showing a 1-minute chart. And let me see if I can find that chart. I was showing a 1-minute chart early this morning, posting that into the den, because if you want to see the correlation, 30-minute charts, you might kind of get yourself and say, well, you don't see it. Here's the 1 minute, the bottom portion of the screen out here. Yeah, I'll turn off the profiles. Let's just do that for a moment, and then we'll turn them back on, because we do want to turn them back on so that we can identify these areas of support or resistance. But there you go with regard to the chart pattern. You can see just the correlation. I mean, it is like truly tick for tick. If you're trading one, you're trading the other out here. So when we get back from the break, let's turn on those profiles. Let's go figure out some levels of support, resistance, in order to be watching for inside of the S&P futures contract and Texas T. Steve Rhodes, TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 124, S&P is up 11, Composite's up 15 points right now. So before we went to that last break, we were taking a look at the correlation between light sweet crude and the stock market. We're using the ES Mini as our correlation to take a look at. We use the S&P because you've got so many equities inside the S&P 500 that are oil related out here. If we take a look at light sweet crude, we were looking at, I don't remember if I posted this in data, we were talking about it, but you're looking at red and blue horizontal lines on my screen. Now the blue lines are the daily levels of market profiles for us to take a look at inside of the ES Mini. That's along the top. That is also along the bottom out here. We can see that light sweet crude right now, you can see it's trading above its resistance area. That's a price point of 32.15. That's good. That's good. That says that light sweet crude, as long as it can hold this, it's a 30-minute chart. You've got about 20, you've got 15, 16, 17 minutes, 16 to 17 minutes left in this trading session. But assuming that it closed above 32.15, that is enough energy to continue moving the markets higher. Now, in the case of the ES Mini, that's the top panel of my chart out here. That says that the price runs up into the 1944 level, 1943.75 to be exact. That may be the end of the move. I mean, that is a level where snipers are hanging out. They're sitting right there on the fence. We're going to see if they're going to take any shots at the bulls, try to knock a few off, try to push them back, because they're going to struggle to push them back if, in fact, light sweet crude is going to run to the 32.50, the 33.46 level, here at 32.54. And the reason is because this correlation is so well. We looked at it, you and I looked at it, tick for tick for tick. I mean, it's extraordinary. And so we're just simply going to use it until we start to see this thing fall apart. The information that I have, and I have not been able to go back and do my own verification, but it comes from a really good source who's got a ton of money to investigate this, to understand it. It's being used in their trading strategies as we speak right now. Says that this correlation stays with us until light sweet crude gets above 50. That's right. And we're only at the 32 price point. So this correlation could be here for a long, long time to come. Now, what happens if, in fact, the 1943 level gets taken out? Well, if we just take a look at our natural levels of support and resistance, these are horizontal trading ranges, of course, brought to us by good old Bud Ross. Of course, I've automated this system so that it becomes easy, so I don't have to sit there and figure out where are the largest number of co-located opens and closes, figure out those price differences, and then figure out where those natural levels of horizontal support and resistance are. Well, inside the ES Mini, it's 1934, so we know we're going up to 1934, then 1943. If the ES Mini gets above 1943, you're going to 1959. It will have gotten its get out of jail card, and it'll head to 1959. Now, I don't know when it's going to do that. I don't know if it's going to do that between now and 5/15 when the contract closes down and reopens at 6, then maybe. But 1959 would be the number. If 1943 holds, then we're just inside this kind of narrowish type trading range out here. But that's where resistance is at. And the whole key is going to be, what is light sweet crude going to do out there? So, 145, we ought to just take a nap. When was the last time you took a nap? Maybe we ought to take a we don't want to take a power nap. We want to go take a look at some other things, see if we can find something else that is moving inside of the market. Well, there's always something moving inside of the marketplace. Let's go take a look at natural gas. Natural gas, what it has done here today. If we take a look at A to B equals CD patterns, it's gone ahead and it's made a 1 to 1.618 A to B equals CD pattern. Now, if in fact it can continue to move higher, you're at 180 right now. But if it can get a little bit higher out here, you'd actually have a hammer candle. Let's say 182. That might do it. We'll just have to come back to it tomorrow. But there is a possibility. Let's go see what kind of expansion we have of swing points out here. The swing points that we're going to expand, this is the current contract, by the way. We're going to go from the low of December 16th all the way to the high out here on the trading session of January 8th. And we're close to, no cigar, but we're close. We're close to the 1.6 expansion, which would have been a $1.71. Close enough for us to draw that pattern in here and say, if we get a hammer candle today, it's a big if at this stage, but if we do get a hammer candle today on the daily charts, you have a confirmed butterfly buy pattern inside of natural gas. And there's lots of folks out there that want to go ahead and play it. If we do not get a bullish reversal signal, if we do not get a hammer candle today, this says to me natural gas can go to 171, it can go to 161 out there, but until the cavalry arrives, it's just what I like to call a potential pattern. It has potential, but no confirmation. So let's watch natural gas out here and see what kind of pattern it forms. Remind me to take a look at it tomorrow. We'll see what kind of message it gave to us. If we take a look at what's going on inside, let's go look at some individual equities. How can we not go take a look at Lending Tree? Let's go see what TREE has got. They were out with numbers out there. It is gapped up. Let's go figure out where Lending Tree is headed. Oh, it's headed. Let's get some volume out here. It might make it a little bit easier for me to go ahead and evaluate the chart. This thing had a nasty day, so this is running into a big level of resistance out here at about the 89, Agent 99 out there from Get Smart. And it looks like that could be a level where it gets really smart and says that's the extent of the move to the upside. Why? Because on the trading session of January 13th, there were 6.6 million shares that traded hands, and somebody bought this equity at the price point of $89.99. And they were not really enthused just a few weeks ago, back on February 9th, when the price got down to $52.11. If you bought something at $89.99 and it went down to $52.11, what would your psyche say after this thing gapped up and got to $84? You might be saying, I got my money back. I don't ever want to take a look at Lending Tree again. That may not be the right move out there, but that's what a lot of people would be saying out there. On the other hand, if it can break through $89.99, and I'm not saying that it can or that it will, but let's go take a look and see if we've got any market profiles that can also assist us with where price might head to. $89.99 looks to be it. But if it can get above that, $94.72 could in fact be the run, and that is on ticker symbol TREE, Lending Tree. Oh, Domino's Pizza, that is now taken the taken the pie. It's taken the pie, and it's the leader dollar-wise, the upside up $14.56. I almost totally blew that. It's up 21%, out with earnings as well. So let's go see this. Of course, Domino's Pizza probably benefiting from the Super Bowl out here, as well as the college football series. Let me put this on a longer-term chart. Is this thing at all-time highs? Oh, it most certainly is. How about that? Boy, Moynihan is he is partying today. Everybody, now here's an equity that you like. Every single person that owns Domino's Pizza is in the money. It doesn't matter when you bought it, with the exception of maybe just a couple of shareholders, because the actual high today so far has been a 132.55, and whoever bought it at 132.55, they're down about 20 cents. But virtually everybody inside this equity, Domino's Pizza, and this is wide price spread. You want to talk about wide price spread? It doesn't get too, this is a daily chart, doesn't get too much wider than this, I wouldn't think. And the reason I say that is because you got to fill in the gap. You fill in that gap from where it was yesterday. If I could fill it in, I would. That is a wide-ranging bar. Domino's Pizza. Delivery in 30 minutes or less. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's up 140. Now S&P is up 13. Composites up 16. Not everything is rosy out here. If we take a look at Restoration Hardware, RH is a ticker symbol, down about 28%. This is a monthly chart, by the way, that we're taking a look at. Now, Restoration Hardware, big touted IPO, and it was big, and it moved, really out of the gates out here back to 2012. It is already back to the high. 38.33 was the high on the monthly chart. You're trading right now at 37.32. Unlike Domino's Pizza, where everybody is at the party and enjoying themselves. In the case of Restoration Hardware, that is not the case. It was recently, this takes us back to November 2015, it was up at the $106 area. You are at $37 right now. Where's this headed to? Nobody knows. I mean, it's headed back maybe all the way to the lows. Maybe it's going beyond that. You got big volume today, gaps to the downside. It's bad news. Bad news bears for restoration hardware. Oh, good. Oh, almost deleted that. We didn't want to delete that. All we wanted to do was to size it down. If we take a look at, let's see, what else is Zebra Technology, ZBRA, down 15%. Yeah, that's down with volume. What else can we? I'm just looking around here, seeing what it is. Bank Rate Inc. What the heck is? Oh, now that is really, when you're doing a live show, what you don't want to see is that come up that says, hey, I can't get any data for you. Let me try this again. Bank Rate. Luckily, I was saved by the bell out there. If we take a look at Bank Rate, wow, down at 684. What's their deal? Oh, well, no, what is their deal? They're going to buy stock, that's for sure, $50 million. I think it's $66 they need to buy a whole. So at least these guys look like they're buying it at lows. I didn't read the entire article on this, but I just want to see, where is this thing? Oh, my goodness. Wow. So this thing is at the lows. It's certainly at the lows. So here's another stock where forged internals. Forgery, is that what you meant to say? In any event here, this thing, everybody in this stock. So we've got Domino's on one side, everybody's in it that's in a winning position, and you've got a Bank Rate, and everybody in this is in a losing position. So there's our wonderful diverse marketplace out here. As far as what to be looking at today, the rest of the day out here, numbers to focus on, I'd say we just go take a look at the daily contracts for the equity futures markets out here as soon as I can find it. Where is it? There we go. If we take a look at this, so you've got the Dow above resistance. It's TAS daily market profile. That's 16,529. You close above that, you can bring 17,213 into the picture. The ES Mini, no confirmation yet. No close above 1944, 1943.75 to be exact. No close above it. If you get above it, says 1974 is in the cards. Inside the NQ, no confirmation yet. It needs to clear and close above 42.34. You do that, you're looking at 42.79, 43.53 becomes the number. Russell 2000 is just slightly above its resistance level, but its TAS market profile at 1024. You close above 1024, you're only 1026, but nonetheless, it's above it. You close above that, my goodness, this actually says you could run up to the 1111 area. So you only have, you got the Dow and the Russell that are saying, hey, we're throwing a party. Apparently, the invitation has not yet been opened by the NQ out here. The ES Mini just has an inclination that is being invited, but it's going to try to get above that 1944 level. And the NQ, who knows what they're doing? They're just kind of like in their own world right now. But those are the numbers to be watching. Folks, it is Terrific Thursday. You know what that means. We've got our man, David White. He's going to be up next, the squeezably, huggably soft polar bear inside the Tiger's Den. And then we've got the Tom O'Brien Show from 3 to 5, Andy Hecht from 5 to 6. And then, hey, that's right, Andy Hecht's got a workshop tonight. Come on over to the homepage at TFNN.com. Sign up for that. That is going to be a great aftermarket party. Steve Rhodes with TFNN. Have a great day, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.